The company decided to redeem the preference shares at a premium of 10%. First thing is, whenever there is a problem on redemption, we have to adjust for the premium and then we adjust for the capital. So whenever you are making use of divisible profits for redemption, you have to transfer an equal amount to capital redemption reserve account. Hello everyone, I am Purnima, faculty in the Department of Commerce and Management, Vidhyaashram First Grade College, Temple of Excellence, MYSURU. I welcome you all to this session. In this Unit 1, Session 2, we will be working some more problems on redemption of preference shares. Now, first let us see what this problem says. The following is the balance sheet of Nitin Spinners Limited as on 31st March 2022, the date of redemption of preference shares. The share capital 15,000, 5% redeemable preference shares of rupees 10 each, 1,50,000. 30,000 equity shares of rupees 10 each, 3 lakhs. General reserve 1,60,000. Profit and loss account 55,000. Securities premium account 1,35,000. Trade payable is 2 lakhs. Total is 10 lakhs. Now, here we have the plant and machinery. 4 lakhs, furniture 42,000, vehicles 48,000, investments 1 lakh, inventory 2,10,000, trade receivables 1,10,000, cash 90,000, total 10 lakhs. Now, on 31st March 2022, the company decided to redeem the preference shares at a premium of 10%. For this purpose, it decided to sell the investments, realizing 97,500, give journal entries and redraft the balance sheet. So, this is the problem here. Now, what do we make a note of? We have to make a note of this preference shares capital. So, first thing is we write preference share capital. So what is the preference share capital given? 1,50,000. Then the next thing is whether it is redeemed at a premium. Yes, the company decided to redeem the preference shares at a premium of 10%. So premium is 10% of 1,50,000, that is 15,000. So total amount needed is 1,65,000. So total amount needed 1,65,000. So first thing is, whenever there is a problem on redemption, we have to adjust for the premium and then we adjust for the capital. So the premium amount is 15,000 here. So we have to see whether there is a securities premium account in the balance sheet. Do we have a securities premium account? Yes. So we have a balance of 1,35,000, out of which we can pay the premium of 15,000. So 15,000 is the premium payable. So in the securities premium account, we have 1,35,000 less premium on redemption, 15,000. So the available balance is 1,20,000. Balance in securities premium account 1,20,000. So this premium money we have already provided out of the securities premium account. Now we need 1,50,000. So for this 1,50,000, again we have to see the balance sheet here. So what does the problem tell us? They are willing to sell the investments. So what is the value of investment here? Investment value is 1 lakh. So they are selling the investments. See, for this purpose, it decided to sell the investments, realizing 97,500. So we have to write a sale of investments. So what is the investments? 97,500. This is the sale proceeds. Now what is the book value of investments? 1 lakh. So what is the difference amount? So there is a difference of 2,500, which is a loss to be debited to P&L account. So 1 lakh we are raising by the sale of investments. Now, what is the next amount needed here? So we have a profit and loss account, we have a balance of 55,000. So out of that we have this general reserve also, we have 1,60,000. So we can make use of the general reserve, and any amount remaining we can make use of from the profit and loss account. But general reserve we have already 1,60,000. So we can make use of that 1,60,000 for repaying the capital. For the capital, so we have the sale of investments 1 lakh, then we will make use of the general reserve. From the general reserve, we are taking this 1,50,000. So we will be left with only 10,000. Balance in general reserve is 10,000. So we have adjusted for the premium out of securities premium account, and we are adjusting for the cash balance. So since we need cash to pay, so we are selling the investments at 97,500, and then we are adjusting from the general reserve 1,60,000. So out of that 1,50,000 we are taking. So balance in general reserve will be 10,000. So these are all the arrangements we are making for the payment to the preference shareholders. So what are the entries we need to write here? So first entry will be for the sale of investments. Then next entry will be for provision of premium from where you are adjusting the money. Then we will be making a provision for general reserve, and then next will be the money due to the preference shareholders, and lastly the payment. So we will start off with the journal entries. The first journal entry will be for the sale of investments. So whenever you are selling investments, it is bank account debtor. Bank account debtor. So you are selling the investments at 97,500. So I write 97,500. You are selling the investments at 97,500. Then profit and loss account debtor. So it is a loss 2,500 to investments account. To investments account 1 lakh. 1 lakh being sale of investments. Sale of investments. Now, the next journal entry we will see. So, the next journal entry will be for adjusting the premium. So, we will debit the securities premium account. Securities premium account debtor 15,000 to premium on redemption of preference shares 15,000. Yes. So being premium provided out of securities premium account. So we have provided for premium out of securities premium account. So the next entry will be for transferring the general reserve to capital redemption reserve. So the general reserve is a divisible profit. So I will transfer general reserve account debtor 1,50,000 to capital redemption reserve account 1,50,000. So, being divisible profits transferred to CRR account, Capital Redemption Reserve Account. Okay, so general reserve account debtor 1,50,000 to capital redemption reserve account 1,50,000 being divisible profits. So whenever you are making use of divisible profits for redemption, you have to transfer an equal amount to capital redemption reserve account. Then the next entry will be for the money due to preference shareholders. Preference share capital account debtor 1,50,000, then premium on redemption of preference shares debtor 15,000 to preference share holders account 1,65,000 being amount payable to preference share holders. So this is the money which is due to the preference share holders. Now the fifth journal entry will be for the payment to the preference shareholders. We write preference share holders account debtor 1,65,000 to bank account. To bank account 1,65,000 being amount paid to preference share holders. So these are the journal entries which we have to pass. So totally 5 journal entries here. So we have made the payment for the preference share holders. Now, so this is the first journal entry, bank account debtor for sale of investments, bank account debtor 97,500, P&L account debtor 2,500, to investments account 1 lakh. Then for provision of premium, securities premium account debtor 15,000, premium on redemption 15,000. So being premium paid out of securities premium account, general reserve 1,50,000 to CRR 1,50,000. Then preference share capital. This is the money due to preference shareholders 1,65,000 payment to preference shareholders. So now we have the balance sheet of Nitin Spinners Limited. Share capital. So there are no preference shares here. So I am writing it as nil because we have already paid back the amount of the preference shareholders. Then 30,000 equity shares of rupees 10 each, 3 lakhs. Then general reserve. So out of this general reserve, out of 1,60,000, I have taken 1,50,000. So only 10,000 is the balance remaining here. And in the profit and loss account, out of 55,000, there is a loss of 2,500. So I write it as 52,500. Now there is one extra entry here, capital redemption reserve. Capital redemption reserve account. So what is the capital redemption reserve? Exactly what is the amount I have taken from the profit and loss account? I will show it as Capital redemption reserve 1,50,000. Then securities premium account 1,35,000. Out of this I have taken 15,000. So it will be 1,20,000. Then trade payables 2 lakhs. Now plant and machinery, it is 4 lakhs. Furniture 42,000, vehicles 48,000, investments nil, inventory 2,10,000, trade receivables 1,10,000, cash balance will be 90,000 plus 97,500 minus 1,65,000. So we have the balance of 22,500. Now the total balance will be 3 lakhs plus 1,60,000 plus 52,500 plus 3,20,000. I am getting 8,32,500. Here also 4 lakhs plus 42,000 plus 48,000 plus 2,10,000 plus 1,10,000 plus 22,500. I get 8,32,500. So this is how we will have to prepare the balance sheet. Now we have the next problem here. The following is the balance sheet of Anjali Limited as on 31st March 2022, the date of redemption of preference share. Share capital 65,000, 12% redeemable preference shares of 10 each. This is the share capital is 65,000, then 4,500 equity shares of 50 each, 2,25,000, profit and loss account 48,000, securities premium account is nil, trade payable is 56,500. Then in the fixed assets we have 3,45,000, non-current investment 18,500, cash 31,000. So total is 3,94,500. Then on 31st March 22, the company decided to redeem the preference shares at a premium of 10%. So they are redeeming at a premium of 10%. For this purpose, it decided to sell the investments realizing rupees 16,000 to leave a balance of 12,000 in profit and loss account, to issue sufficient number of equity shares of rupees 50 each at a premium of rupees 13 per share to raise the balance of funds required for redemption. The equity shares were fully subscribed. Give journal entries and redirect the balance sheet. So what are the things we have to make a note of here? So we have to make a note of the preference share capital. So I write preference share capital. How much it is? 65,000. Now we have to add a premium of 10% plus 10% premium. So it will be 6,500. So when I add all this, it will be 65,000 plus 6,500. So that is 71,500. This is amount needed for redemption. Amount needed for redemption is 6,500. Now, first thing is we have to adjust the premium account. So, we will see what the company is doing to raise the money here. So, first thing is they are selling the investments. The sale of investments. Rupees 16,000 they have realized. Then to leave a balance of 12,000 in P&L account. So what is the profit and loss account balance? 48,000. So before that we have this investment. So the investment value is 18,500. See, the sale of investment is 16,000. Then book value of investment is how much? 18,000. So there is a difference of 2,500 loss. So there is a loss here. So we will have to debit the profit and loss account to be debited 2,500. Now the next step will be whether they have told to leave a balance of 12,000 in profit and loss account. Next, we have the profit and loss account here. What is the balance here? 48,000. So they have mentioned that they need a balance of 12,000 here. So I write profit and loss account balance 48,000 less amount to be retained 12,000. So 48,000 minus 12,000, it will be 36,000 less loss on sale of investments. So 2,500 is the loss. So from this 36,000 minus 2,500. So 33,500 is available. Balance available for redemption. So 33,500 is available for redemption. Now they are telling we have to issue sufficient number of equity shares of rupees 50 each at a premium of rupees 13 per share to raise the balance of funds required. Now, what is the share capital here? 65,000. So, what is the amount available here? 33,500. So, we have to find the number of equity shares to be issued. So share capital 65,000 less balance in P&L account 33,500. So from 65,000 minus 33,500. So 31,500 we need balance to be raised through fresh issue. So we need 31,500 from the sale of from the issue of equity shares. So equity shares are being issued at rupees 50 each. So the number of equity shares equals 31,500 divided by 50. So each share value is 50 rupees. 31,500 divided by 50. So that will be 630 shares. 630 shares are to be issued. Now, whenever you are issuing the shares, you will be issuing at a premium of 13 rupees. So that premium money we can adjust to pay the premium of these shares. So this 6,500 I can pay out of the fresh issue of equity shares. Now let us go for the journal entries. So while writing the journal entries, the first journal entry will be for sale of investments. So we'll write sale of investments, bank account debtor 16,000, P&L account debtor 2,500 to investments account. To investments account 18,500 being investments sold at a loss. So investments are sold at a loss. So I have debited the profit and loss account. Then the next entry will be the share capital. Equity shares. How many equity shares I am issuing? 630 equity shares. So I write second one, issue of equity shares. So I write bank account debtor. Bank account debtor 630 into 50 plus 13. So 50 rupees is the value of each share and 13 rupees is the premium. So 630 into 63. So that will be 39,690 rupees. So this is the inclusive of the premium to equity share capital account. To equity share capital account 630 into 50. So that will be 31,500. Then to share securities premium account. To securities premium account it will be 630 into 13. So it will be 630 into 13. 8,190. 8,190 being shares issued at premium for the purpose of redemption. For the purpose of redemption. So we have this issue of equity shares. Now the third entry will be for provision of premium. So we already have 8,190. So I debit this account. Securities premium account debtor 6,500 to premium on redemption of preference shares 6,500 being premium provided out of securities premium account. So I have made the provision for premium. Now the next thing is I have to draw from the profit and loss account. I am having 33,500. So this I have to transfer to capital redemption reserve. So the next entry will be fourth one. Profit and loss account debtor 33,500 to capital redemption reserve account 33,500 being divisible profits used for redemption transferred to CRR account. So we have transferred to the capital redemption reserve 33,500. Now the next entry will be preference share capital account debtor 65,000, premium on redemption account debtor 6,500 to preference share holders account 71,500. So what is this? Being amount due to preference share holders. So this is the amount due to preference share holders. The last one will be the payment of the money. Preference share holders account debtor 71,500 to bank account 71,500 being payment made to preference share holders. So we have made the payment to preference share holders. So these are the journal entries we have to write. Now the balance sheet of Anjali Limited after redemption. So we will first see what is the previous balance sheet. So in the previous balance sheet, there was this share capital 6,500, 12% redeemable preference share. So this will not be shown in the balance sheet because they have been redeemed. Now we have 4,500 equity shares of rupees 50 each. So we will write that. So I will write here 4,000 share capital 4,500 plus 630. So what is the 630? The new issue of equity shares. 4,500 plus 630 equity shares of rupees 50 each. So 4,500 plus 630. 5,130 into 50. So it will be 2,56,500. Then next, securities premium account. So in the securities premium account 8,190, I have taken 6,500. So 6,500 I have taken. So 8,190 minus 6,500, 1,690 is the balance. Then profit and loss account. 48,000 minus 2,500 minus 33,500. So the balance will be 12,000. So balance they told us to retain it at 12,000. Then the next one will be securities premium account over, profit and loss account finished, trade payable. So trade payable 56,500. Trade payable it is 56,500. Now in the asset side we have fixed assets, there is no change, but investments we will not write, cash there will be a change. So I write fixed assets 3,40,000 45,000. Then cash. So what is the cash balance available? 31,000. So 31,000 plus. So from the fresh issue of equity shares, how much they have got? See, what is the from the fresh issue? 39,690. They have also got from the investment 16,000. We have to add all this. So 31,000 plus 39,690 plus 16,000 minus 71,500. So the balance will be the cash balance. So I write, so 31,000 plus 39,690 plus 16,000 minus 71,500. 15,190. So the balance is 15,190. Now we'll add the total. 3,45,000 plus 15,190. It is 2,56,500 plus 1,690 plus 12,000 plus 56,500. So we have to mention the capital redemption reserve 33,500. So we get a total of 3,60,190 rupees. So in this way we have to work out the problems. With this we come to the end of the session. Hope you have all followed it. Thank you.